Bitcoin's price could surge past $100,000, according to one expert. But another warns of a pullback this summer. What does this mean for your crypto investments? Find out now. Plus, the Trump family goes all in on crypto, while a K-12 education company makes a huge bet on Solana. Don't miss this market update. In the latest video from Altcoin Daily, Donald Trump Jr. discusses his family's foray into crypto, driven by their experience of being debanked after entering politics. He emphasizes the potential of crypto to democratize finance and eliminate middlemen, citing real estate as a prime example. While a new Trump wallet has emerged, Trump Jr. clarifies that it's not officially affiliated with the Trump Organization, which plans to launch its own wallet soon. Classover, a K-12 education company, has signed a $500 million convertible note deal for a Solana reserve, with up to $900 million earmarked for purchasing Solana tokens, having already bought over 6,400 SOL, worth $1.1 million. The Trump family's public embrace of crypto, regardless of the Trump wallet confusion, lends a degree of mainstream legitimacy to the space. Their narrative of being shut out by traditional finance resonates with many who feel disenfranchised by the current system. However, the potential for these ventures to be perceived as vehicles for political fundraising or influence peddling remains a concern that needs careful consideration. The Classover deal is particularly interesting. A K-12 education company betting big on Solana is not business as usual and might indicate where the technology is moving. In the latest video from Crypto Rover, Bitcoin is forming a symmetrical triangle, hinting at a potential upward breakout. He predicts a price target of $117,000 to $118,000 after the breakout. The video discusses large entities like BlackRock buying Bitcoin and Ethereum, particularly $77 million worth of Ethereum yesterday and over $375 million in a Bitcoin ETF. BlackRock alone now holds $4 billion in ETH. He's bullish on Ethereum, suggesting it may outperform Bitcoin in the short term. The video also mentions altcoins potentially performing well over the next 3 months. Ethereum's price movement against Bitcoin is analyzed with expectations of a bounce before a potential lower high. It's interesting to see how institutional investment is influencing the crypto market. While BlackRock's significant holdings in Ethereum are noteworthy, it's important to remember that past performance isn't indicative of future results. The comparison with the 2017 cycle is intriguing, but each cycle has its own unique dynamics. The overall market sentiment seems to be cautiously optimistic, but the volatility inherent in cryptocurrencies necessitates a balanced approach. In the latest video from Lark Davis, he discusses a potential XRP breakout. He points out the recent 20-day and 200-day EMA retest and rising volume as positive indicators. Lark mentions a downtrend line touchpoint, and if XRP breaks above this line, the 20 and 50-day EMAs, with continued volume increase, he thinks a breakout is likely. He predicts a bullish MACD crossover in the next 3 to 7 days. Lark also shows how a similar MACD crossover in April led to a price rally from $1 to $2.60, and also mentions using BitUnix exchange to trade XRP. While the technical analysis presented is interesting, it's important to remember that market predictions are never certain. The crypto market is especially volatile, and XRP's price can be influenced by many factors not covered in this technical analysis, such as regulatory developments or general market sentiment. Although the chart patterns might suggest a breakout, it's equally possible for XRP to experience a downturn. In the latest video from Ben Cowan, we look at Bitcoin's supply and profit and loss. Historically, market cycle bottoms happen when the two metrics cross, like in 2011, 2014, 2018, March 2020, and late 2022. Market cycle tops aren't as clear, but applying a 30-day moving average helps. When this metric goes above 90%, big pullbacks usually start. Currently, it's at 96.71%, which suggests the rally from April might extend to late May or mid-June. Cowan predicts a pullback in Q3, possibly around August or September, similar to previous cycles. He suggests watching when the 30-day moving average gets back down to about 77%, as that has marked lows before surges. I find it interesting how Cowen uses historical trends to make predictions. While the past doesn't guarantee the future, looking at Bitcoin's supply and profit and loss, especially combined with a moving average, seems like a smart way to get a feel for the market's overall sentiment. New sentiment, price predictions, and even new altcoin project releases can all factor into market fluctuations. It's always a mix of data analysis, a bit of educated guesswork, and just keeping your eyes on the prize. In the latest video from Coin Bureau, Guy discusses a new report from the Bank of International Settlements, BIS, that shows crypto, despite warnings, has become a parallel financial system with $2.6 trillion in cross-border flows in 2021. Almost half of this activity was from stablecoins like USDT and USDC, largely driven by remittances and easier international transactions. The report also shows the US and UK leading in Bitcoin, USDC, and ETH flows, while Turkey and Russia dominate USDT flows. Although the BIS acknowledges crypto's ability to bypass traditional financial barriers, it still pushes for greater control. The report finds that crypto flows defy traditional economic gravity models, meaning they are less affected by distance or shared borders than fiat currency. This suggests crypto truly operates as a borderless financial system, something the BIS sees as a threat to central bank control. It's fascinating how the BIS seems to both acknowledge and fear crypto's success. Their concerns about control are understandable from their perspective, but it also highlights why crypto is so appealing to many. It offers a level of financial freedom and accessibility that traditional systems don't. The BIS's own data shows how people are using crypto to sidestep costly remittances and navigate volatile economies, which seems like a positive development. It'll be interesting to see how governments and central banks react to this growing trend of people seeking financial alternatives outside their control.